A very good morning. Welcome to Chartbusters. I'm Nigel D'Souza, and joining me as always is Mangala Malu. Well, we've had a good start in the green. Remember, overnight the cues were positive, but for India, the additional positive is crude oil prices have corrected, which is a tailwind for our economy. And that's where, in fact, we're seeing a good bump up, approaching that 17,800 odd mark, which has been a bit of a resistance zone. The mid-cap index, after a couple of days of outperformance, it's taking a bit of a breather, up close to around 0.5%, but relatively underperforming the Nifty and the Nifty Bank. Hey, Mangalam.
Hi, Nigel. You know, the broader markets, though, are still doing extremely well. Yes. We still have over 2,100 stocks in the green for about 700, which are in the red. So the advanced decline ratio is 3:1. And to spice things up, in the second half of trade, we have the weekly options expiry as well. So let's see where we go from here, whether this resistance of 17,750 to 17,800 holds, or does it get taken out in today's trading session. First up, all the top stories that we're tracking this morning for you. It's a strong start for the Indian market on the back of positive global cues. The Nifty trades above 17,750, and the IT sector is leading it. All the other sectoral indices gain, while mid-caps slightly underperform today.
And pain stocks, they move higher in trade as Brent crude prices slip below $90 per barrel.
Large trade in Indigo, 3.6% equity worth over 2,700 crore rupees changes hands at 1,900 rupees a share. Sources say the promoter family Gangwals have sold stake. Stock trades lower by almost 2.5%.
Concord moves off the morning highs after yesterday's revision in the land lease policy. Brokerages say that privatization will be the next trigger for the stock. Markets holding in the green. The tricky question is what we do from here. To help us out with that, Shilpa Rao joins us to give us a quick technical check. Hi, Shilpa. What would you do right now? We're closing to around that 17,800 odd mark. We have a big global event that's coming up in the next 10 days or so. How do you approach trade, and what are the levels you're looking at on the Nifty? And also, you could run us through your stock picks.
Good morning, Nigel. Nifty holding above 17,800 now in futures. It's on the verge on a very crucial zones now. If we hold and sustain the 17,800 zones, then very quickly we will see 18,000 coming up. Today being the expiry, also weekly expiry, one can go long and take a, as a hero zero trade of 7,900 call, which is trading at around 6 rupees, 6.5 now. One can take a risk out there. Apart from that, Bank Nifty also trying to sustain above 40,000 is a very crucial zone for the indices, because if we sustain that, then 4,200, 4,300 will come very easily, and above that 41,500 is also seeing some very aggressive additions in the monthly expiry. So likely the series might see higher levels in Bank Nifty in coming days.
All right, high levels in Nifty Bank. Shilpa, thank you for joining in. I was just looking at the IT index, which is corrected about 28% this year. The Nifty Bank is up around 12% this year so far. This 40% outperformance of the Nifty Bank over the IT index, do you think at some point this will come undone? Yesterday, we did see the IT index do well. Will that continue to move higher, or yesterday's up move was just a flash in the pan? And your individual stocks, what do you have for us?
IT index, if you see, it's a mixed bag. Not every stock is, performing with that strength. But of course, few scripts out of those can do nice, especially the mid-cap stocks in that. So IT is a wait and watch scenario for me as of now, not to jump in immediately. And as coming to the stock picks for the day, today I have two buys. One is IOC. OMCs are in momentum. So IOC with a stop loss of 71.5. It is trading at 73 now. One should look for targets of 76 and 78. And above that, I also have a buy called IDFC First Bank. It is trading at 51. It has a very strong support at 49.50. From here, one should look for targets of 55 to 58 in coming weeks.
Okay, thanks so much, Shilpa, for stopping by and giving us your call on the index, as well as a couple of trading picks. For the time being, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Nitin Agarwal of moneycontrol.com joins us to talk about a stock that is tracking closely. Nitin, over to you.
So the company that I have chosen is Subros Limited, an auto ancillary company. Despite the semiconductor chip shortage and rising raw material prices, the company continues to maintain its operating margin, as is evident from its Q1 number. The company put up a really good show in the Q1 despite these challenges. The fortunes of the company is linked to the growth of the PV industry, and the company's business share in the PV industry is around 40%. Though there has been challenges with regard to the severe shortage of semiconductor chip and hence the production cut by the OEM. However, with the ease of chips, the production is increasing by OEM as evident from their monthly wholesale numbers. This is expected to augur well for a company like Subaru. Further, the pent-up demand and preference for personal vehicle will continue to drive the demand for the passenger vehicle. Moreover, Maruti, the leader in the PV segment, is the company's largest client. The company will supply Maruti's new Brezza that has a business value of around 70 to 80 crores, and incremental business from the Brezza will add value to the top line. It is also supplying the company M&M's XUV 700 model where the content per vehicle is higher. Secondly, the CV segment is expected to do well on the back of the government's focus of infrastructure, mining, and construction activity. In fact, the CV segment has been growing quite well, as is evident from the monthly wholesale numbers of the OEMs. The company has also developed a tractor radiators for M&M and Mitsubishi Alliance for domestic market and exports to Japan and US. Another important factor for the company is the localization effort. Company has been trying to localize its value chain so that it can maintain its operating margin. Lastly, the company currently trades at around 14.3 times FY24 projected earnings, which we believe is very reasonable for a company like Subaru's.
All right, take that point. With that, we slip into a short break, but don't go anywhere because on the other side, we have a very special discussion lined up for you. The managements of Sri Digvijay Cement as well as Kesoram Industries will join in to discuss the outlook for the cement space. Stay tuned.
Welcome back. You're tuned in to Chartbusters. You're on CNBC-TV18. Well, cement stocks, they have been the talk of town. This after stocks have been surging in the past week or so. There is a hope that demand is picking up. There have been select price increases as well that are being pushed through. And now cost pressures as well are receding. Will there be any consolidation in this space? Well, let's bring in our guest. We have Mr. Anil Singhvi, Executive Chairman of Sri Digvijay Cement, as well as Mr. Radhakrishnan, a whole-time Director and CEO at Kesoram Industries. Thanks so much, gentlemen, for joining in. Well, Mr. Singhvi, coming straight to you first. Could you give us a sense about pricing first up? How are prices on ground? There are, talks that, in fact, there has been a price increase that has pushed through in the month of September. Can you confirm that? And also give us a sense about what has been the price correction, in this quarter so far in comparison to quarter one.
Hi, Nigel. Thanks for having me. There are two things which I very clearly see is that the prices have been slightly improving, more so in south and east where the price increases have been taken. In north, still struggling because the demand has not yet picked up very well in north and west also. I think the monsoon has been rather heavy for the month of August. I don't think we have seen this kind of monsoon in many parts of the country as what we have seen in August. So demand has been a little tepid in those areas where monsoon has been heavy, and I expect that prices will inch up in next fortnight or so because the monsoon seems to be now withdrawing and demand is picking up again. So my expectation is that the prices which we lost during last 2-3 months on account of monsoon will come back again. Cost side pressures are still there. They have not come down except for the pet coke. So industry's profitability obviously is still under a lot of strain. But if the prices move up with the demand in October, I hope margins will come back again from the October-December quarter.
That point. Mr. Radhakrishnan, welcome you on to the discussion as well. Could you give us a sense of how the prices have moved in both west as well as south? You all were looking to push some hikes in September. Has that happened? How much has the cut been? How much has the revision, if at all, any been?
The prices have marginally gone up. If you ask me, have the prices gone up to weather the cost pressures? Not yet. The substantial increase in cost pressure in Q1 and yes, Q2, as Mr. Singhvi suggested, in pet coke, there is a decline. But overall, the fuel prices are still on the higher side. There has been price increase. Hopefully, going forward, there will be further increases to absorb the cost pressure.
Okay. All right. So not managed to push through the entire cost pressure. But Mr. Singhvi, we'll get back to talking about demand pricing. What about inorganic growth? The street is abuzz that there is plenty of action out there. In our interactions in the past as well, we have chatted a lot about it. Is there something in the works? Should we be looking forward to some consolidation? There's plenty of buzz. Whether the larger names will come and gobble up some of the smaller names. Your take?
Well, cement has been, for last at least 35, 40 years that I have been tracking, cement has been one of the industries where you have a consolidation, then again new players come in. So I think it's a constant game. I wouldn't call it that it's a one-time affair for larger players to, I wouldn't use the word gobble up, but yes, get consolidated and look for larger players in the industry. So if you look at last 20, 25 year journey, I think the large players have become larger. So definitely the marginal players have moved out. But I think the industry is still too fragmented for us to really look for just about 8, 10 players having 80, 90% of capacity like any other play in India. So cement still remains very fragmented. So there is enough scope for larger players to really consolidate. We haven't seen much of consolidation taking place in last at least 3, 4 years. I mean, I would call wholesale sale of cement assets to Adani as a consolidation. It's a transfer of asset from one hand to the other hand. But I think looking at the large 5, 6 players, there is room now for inorganic growth as well. Because I think organic growth in India in terms of setting up brownfield or greenfield takes close to 3 to 5 years. And I think the demand, if it goes up in next year or two, I think we'll definitely have some supply coming in.
Right, we take that point, Mr. Singhvi, that it has been a game of consolidation over the last many years, and a lot of people have been looking constantly. There are companies which are trading at lesser than replacement value, so they make them attractive as opportunities for the larger players, etc. But what we're trying to understand is that over the last couple of weeks or so, if not more, this chatter has increased a lot. So what we try to understand from you is that, is there anything that you are aware of which is taking place in the industry? You can choose not to take any specific name, etc. But is there any activity? Is the volume of activity with regards to this increasing over the last couple of weeks or so? Because that's the chatter that we hear.
Well, that's the chatter which I'm also hearing. So I don't have any specific knowledge. But to
I think we'll just fix that connection with Mr. Singhvi. He was trying to make a point out there. But since Mr. Radhakrishnan's with us, Mr. Radhakrishnan, let's come across to you. The street believes that smaller players, 5 to 10 million tons odd, they could be picked up. Has there been any approach to y'all, Kesoram Industries? And the buzz forever has been that Ultratech Cement is interested. Could you clarify on that?
No, it's always a smallish, niche, beautiful and strong, right? That's the way. So the small players will thrive. Probably, I can say, what was 4 million, 5 million, a mini plant, people used to say. Now, the way the larger players have grown, now 8 or 9 million, the definition of mini plants may shift. That's the way.
No, Mr. Radhakrishnan, but specific to the point, have any of these larger players, I can see a bit of a grin on your face as well, so this will be quiet. This is going to be interesting.
I am grinning as time and again I have clarified to you.
No, but in the last 1 month in particular, people are saying that there's a lot of action on ground. So has any of these big players come and, said that, have approached you? Any kind of discussion?
Absolutely no.
Okay. But what if, you're trading at about $60 per ton or less than that? If there is an offer, do you think promoter will be willing to sell?
Absolutely no.
All right, take that point. We have, Mr. Singhvi back with us. Mr. Singhvi, you were making a point. You said you concurred with us that the chatter has increased, but you refused to speak about some specifics. I mean, what is it? Is it larger players looking to, consolidate with players which are trading sub-replacement value? Or is it smaller players looking to merge with themselves? Can you give us a sense, any color on what geography, anything that can maybe, give us a little more color into the chatter that is going around right now?
Yeah, I don't expect things to happen in next couple of weeks or couple of fortnights. But I think when you look at the larger theme of cement, for the entry of the likes of Mr. Adani into the game, so you have the first 5 players having capacity to really consolidate the industry further. So I look at it next 2-3 quarters time, there will be definitely consolidation. There will be players who are maybe not efficient, maybe unable to augment the capacities. will be taken over by those who think they can expand the capacities by way of acquiring those assets, and they can augment even larger capacities by making those plants run very efficiently. So I think that time has come for cement industry to look for a wave of consolidation. So I wouldn't put A acquiring B, but the point in what I'm making is that in the next 3 to 4 quarters, we will see a game of consolidation of at least 30 to 40 million tons.
Just to follow up on that, what geography are you hearing the maximum amount of chatter from?
Yeah, just to be a little bit more specific.
I don't think.
Mrs. Singhi, the wave that you're talking about, is it somewhere in the western region? Because, there is some candidates out there that the street believes, and the southern region as well. The street is a buzz. Do you think the wave is going in both these two directions?
Because what happens is once you put the geography, then you will ask the name.
No, we won't ask you the name. Don't worry.
We are stopping at the geography from here. The next interview, maybe we'll try to get the name. But for now, we are just focusing on the two geographies. Maybe a 6 million ton plant in West India and maybe a 15 million ton plant in South India. Have you heard anything on that?
But you know it well that everyone can then hazard a guess on that. But let me concentrate on that, because we are not here for any speculation or any market gossips. I wouldn't indulge myself into that. So my point is very clear that yes, industry will go through consolidation. It is left to the players who wants to get over, who wants to be taken over and who wants to take whom. But point which is important for industry, I think we should, as a responsible channel, should look at it that having gone through this very difficult period for last almost about 2 to 3 quarters, I think industry is now looking for better demand, better pricing and consolidation. Right. I think when you look at the theme for the industry, that's a very important theme on this, that prices are improving or they will improve. Demand is going to go up, capacity creation is very low, and consolidation is going to happen. Right. I think it's the whole industry's profile and whole industry's valuation will definitely start inching up and moving up.
We take that point. We take that point, Mr. Singhvi. Before we go across to Mr. Radhakrishnan for his comment on the volume EBITDA per ton sort of outlook that he has for the year, a final follow-up to you, Mr. Singhvi. You're a 1 million ton plant. Have you been approached by any larger player?
And you think that I, in any case, get into this?
Okay, there was chatter between Sanghi and you as well. Has something like that happened?
No, I wouldn't, as I mentioned to you, I won't get into the names and all that. And I have been in industry for long enough to understand the dynamics here. Yeah. Each one himself or herself on this matter. But point which I'm making is that happy days are here again for industry.
Okay, all right. Very quickly, before we let you go, what kind of volume growth are you looking at for FY23? And EBITDA per ton, you're holding at around 1100 rupees per ton. Maybe the worst of cost pressures are behind. So what will the guidance be on both these two parameters?
Well, I think the worst is still continuing. I don't think the worst is behind us completely. Okay, because the coal prices still remain very high. When we are looking at that, what the prices of the petcoke moved from 8,000 to 23,000. They've come back to about 16,000. But still they're 8 to 16,000. So unless the prices move by about 30 to 40 rupees a ton, it will be difficult to hold on to the margins which we had. But yes, squeezing the best out of the plant, I still expect that we will have a 10% growth over last year. And EBITDA margin for the full year should be in the region of 1,000 rupees, what we have been making.
All right. So 10% volume growth and 1,000 rupees on an EBITDA per ton. We got that correct, right, Mr. Singhvi?
Yes.
Okay, all right. Let's wind this down. Mr. Radhakrishnan, what about you? You were talking, I think, about a volume number of closer to around 8 million tons, I think so. 7.5 to 8 million tons. Or if you could give us a revised number, or do you want to stick to that? And EBITDA per ton of 600 to 650. Petcoke prices have cooled. Do you think it's time for you to revise that number?
No, I would stick to those numbers at this juncture and wait for a quarter more.
So you're saying 8 million tons is what you'll do with 650 rupees of EBITDA per ton?
Correct. Absolutely.
Okay.
All right.
Absolutely.
Thanks a lot, gentlemen. It's been an absolute pleasure speaking with you guys. You all did, whet our appetite a little more in terms of the consolidation, etc., the situation that there is right now. But, trust us to call you again in a few weeks probably. And this time, at least, we'll have a little more, Nigel, and we'll probably get into the specifics as well.
I'm wondering whether by then we have a deal. Because the way the stocks are moving, the street believes that there is a deal on the cards. And it's been happening Mangalam phase-wise. First, the smaller companies, they ran up. Yeah. Now the street believes maybe the worst is over for a company that trades at peak valuations. That's Shree Cement. It traded at around 32,000 rupees odd, fell down to around 19,000 rupees odd. In the last few days, that's been the big outperformer from being the biggest underperformer in this year so far. You know, Shree Cement, if you just pull up maybe the year-to-date chart, that's in 2022, and you pull up the Nifty chart, you'll see that the stock has underperformed. But it's done a good rebound. So let's see whether or not there is something on the cards.
We will monitor that situation as we do that. And I'll, as Nigel pointed out, that Shree Cement has been an underperformer, was exited or has been excluded from the Nifty from the next revision itself, September 30th. So we'll monitor whether some of that underperformance is now coming undone, or is there some more to that price move that we're looking at. But talking about price moves itself, a lot of stocks are buzzing around in the broader markets. Metropolis Health, that's the one which is up at the high point of today's trading session. That too has been a bit of an underperformer in the past. You know, from the start of this year is down almost 60%. So Metropolis Health is doing some bit of a bounce back. And alongside that, we have a couple of these other names as well. Cummins, for instance, has moved to the high point as well. On that note, what we'll do is we'll take your leave on this edition of Chartbusters, but you stay tuned. Trading Hour comes up next.